Welcome to Launchbase, a fast-paced podcast exploring the latest in tech funding and product launches. In under 30 minutes, we break down key trends, interview industry leaders, and uncover what's driving the next wave of innovation. And now your host, John Radford.
Hello, and welcome to another episode of Launchbase. This is the podcast that dives into all things tech in under 30 minutes. I'm your host, John Radford, and each week I chat with individuals shaping the tech landscape. So, do you like wine? Do you like investing? Well, today I'm excited to be joined by Callum Woodcock, founder and CEO of WineFi. Callum has an impressive background and he's worked at Fidelity, JP Morgan before venturing into entrepreneurship. Under his leadership, WineFi has successfully raised £500,000 in an oversubscribed funding round, and that was back in 2023, I might add. And subsequently, he has hit 7 figures plus within 7 months of launch. Actual money, this is revenue we're talking about here. And attracted investment from SFC Capital, Founders Capital, and Fine Wine Group Coterie Holdings. And they've recently been shortlisted in Seed Legal's Startup Award. Welcome, Callum.
Thank you, John. It's great to be here. That was a hell of an introduction.
It was, wasn't it? It was quite long-winded and whatnot, but I'll let you do a better one now, but hopefully that's covered most of it.
No, definitely. I think it was probably the most flattering introduction I've received, so thank you very much. So, John, as you said, I'm Callum Woodcock. I'm the CEO and founder of WineFi. For our listeners that aren't familiar, WineFi makes investing in fine wine as seamless and cost-effective as investing via Robinhood or eToro. As you mentioned, since launch, we've grown rapidly, and really we have our sights set on becoming the go-to channel for investors seeking to access fine wine for its characteristics as an investment rather than something you crack open one day.
Amazing. Usually ask people to start backwards to front, but actually straight off the bat, I've got something there because this podcast is called Launchbase and it kind of signifies you're launching and off you go and we're scaling and all that sort of stuff. And, we want to help people scale. And so you mentioned the growth from launch. I'd like to talk a little bit about that because the numbers that we're talking about here are, seriously impressive.
Thank you.
How did you achieve that? Any tips? Was it luck, judgment, good product, timing, all the rest of it? Talk us through that.
Sure. I guess gem of the idea came from me really trying to solve my own problem. When I was in my mid-20s, I became familiar with wine's characteristics as an investment. So for your listeners that might not be aware, it's uncorrelated to traditional asset classes like equities, bonds, and commodities. It's capital gains tax exempt in the UK and several other countries as well. And historically, it's offered very attractive risk-adjusted returns. So I thought, great, and it's a fun investment. Let's explore this a little bit more. And when I realized there wasn't really a low-cost solution to investing in wine, historically, the only way to invest has been to build a wine portfolio outright, which is quite an expensive way of gaining access. I thought, okay, well, in that case, let's build it. It was quite interesting, really. So we went to market October, November 2023 after raising that funding round, as you mentioned. And we announced on LinkedIn what we were doing. And at that point, we literally just had a landing page. And
great.
I was expecting a few signups. While we built the platform, I was basically expecting to have a slightly longer lead time to actually having a platform in place.
Right.
And as it was, we ended up having a new sign up. I think it was every 4 minutes for 48 hours. So we had this enormous lead list, and it meant we were in this very strange situation where, we had a data engine and an investment committee to select the wines, but we didn't have a platform. And obviously we had positioned ourselves as a fintech, or a vintech is the term that we're trying to get off the ground with very limited success.
Yeah. Keep going.
Yeah,
it'll stick eventually.
Trying. And it was a really, really weird one because I'd had the experience, between JP Morgan and starting WineFi, working at a B2B SaaS company where they built an incredible piece of technology. But the first 6 months of my tenure there as commercial director was spent really trying to find product market fit for that technology. So looking at what sectors it could be applied to. We ended up settling on legal tech and the rest is history for that business. They're now doing very well. But I kind of anticipated the same thing happening here because a lot of the pushback that we got when we were raising our pre-seed round was from, angel investors that were very passionate about wine as a consumable. And a fair few of them went, well, why would you invest via, a product where you can't drink the wine? And I was like, well, I would, and there must be other people like me. I want to be able to access it because of its investment characteristics rather than something that I want to drink. I don't want to do that too, but that for me was collecting wine rather than investing in wine. It's very important not to conflate the two things, given one is for pleasure and one is for anticipated financial return.
Yeah.
So we're in this very strange position when we launched, and we had this huge kind of flow of, I guess, inbound leads, you would call them, where we almost achieved product market fit immediately. The proposition, I think, is very clear.
You've got product market fit pre-product by the sound of things.
Yeah, pre-product.
So, but hang on, just to get this clear, this was off the back of LinkedIn announcement.
It was a LinkedIn announcement.
So what had you done prior to that, leading up to that, though?
So in terms of on the business or on the marketing side?
Or just on the marketing side, like you must have sort of built the brand, like, because we're connected on LinkedIn and I see your stuff and it's great and everything. So had you been doing that for a long time prior to launch, or?
Honestly, not at all. So The day that we launched was the day I updated my LinkedIn to CEO at WineFi. And that was the first kind of big reveal. Wow. So it set the tone very quickly for what our go-to-market strategy would be, which is building in public, sharing the journey, trying to educate around wine as an asset class as much as possible.
Sure.
And to your original question, which was around our go-to-market, we ended up leaning into that.
Yeah.
Basically to prove out the model. And, we got quite a lot of traction on LinkedIn. I think it captured people's imaginations.
Right.
Wine is fun.
Yeah.
And I think that a lot of people realized we were solving a problem that they didn't necessarily even know that they had.
Yeah.
And it was pretty amazing because I was anticipating having to keep the people that had signed up initially warm while we built the platform. And loads of them had basically said, look, can we invest now? Willing to come on that journey with us while we actually built the platform. And it was brilliant in a way because it meant that we had existing clients, we had existing revenue from the get-go, and we could actually use those clients as design partners to produce the first version of the platform.
To get that early feedback and what they actually want and need.
We had a really tight feedback loop. And I would like to say that it was because of our skill as a founding team or whatever, but I think there was a huge degree of luck in that process, because I think without those early clients that were invested both literally and metaphorically in the business, we probably wouldn't have had the network effects that we've ended up achieving, which allowed us to scale fast in our first year. So very grateful for that.
Yeah, but you kind of make your own luck through hard work and grit and everything, and luck is where hard work meets preparation, is what I think. And I think you've got to put yourself out there to get the luck, I guess.
Yeah, no, I definitely agree with that. And I think that's something that I've really learned about myself. Posting on LinkedIn is scary, cringe-inducing, and, pretty uncomfortable at the beginning, especially when you're posting like we do.
Yeah.
So, I was, it sounds crazy in hindsight, but I remember my first thought when I put up the first LinkedIn post was, I am going to get so much flack from all of my mates for this. And I did, don't get me wrong.
Yeah.
But the reward is at the other side of that cringe.
Yeah.
And I think that's something that, it now feels, I don't want to say second nature, but it feels very comfortable and familiar and just something we do. The whole team posts several times a week.
So that's an interesting one. So the team dynamics, you've got the rest of the team posting as well and kind of helping with that marketing push.
Yeah. One, I think that's really important. And I think it's something that most businesses massively underutilize, including in the B2B world. If you're a company with 100 employees, but you have a sales team of 10, it makes no sense that only those 10 people should be involved in promoting the business.
I tend to agree.
I would expect that actually to change quite a lot moving forward. Even just based on LinkedIn connections, the amount of people that will be connected to, even in the B2B SaaS world, a prospective client for whatever product or service their company sells is vast. And yet, typically those more back office teams, whether they're developers or HR or whatever, are not involved in that process when actually they should be passing leads up to the sales team. So we took that approach. It helps that the team is small, really highly motivated. But there's also another element there, which is like, when someone joins WineFi, I want them to start developing their own personal brands, because we are living in the era of personal brands. I don't think there's any doubt about that anymore. Yeah. We're seeing it much more on the B2C side than we are on the B2B side, but I expect that will filter through as well. And actually, those LinkedIn followers and that kind of muscle that they will have built by posting will follow them for however long they are at WineFi, and importantly, beyond. None of that is just like, it's not like we're beating them with a stick and saying you've got to post every day. It's very much something that we've got the team on board with. Yeah. And I think that's really important. And
do you think that comes top down from a founder then?
Maybe. I think it would be very difficult to ask the team to do something that I'm not doing. Yeah. And so maybe it is top down, but I think they've taken to it very enthusiastically, and actually our head of data has really become a bit of an oracle in the wine space, because we're the only ones sharing these kind of insights that allow investors to compare wine to other asset classes.
Yeah.
Or I should caveat that, one of the few that are doing that.
Sure.
And as a result, he's become, a source of interest to the wine trade, who are kind of piggybacking off his findings and using it with their own client base. Yeah, it's an interesting...
That is interesting. I've got something on that one, actually. We go back to the start of WineFi and the launch and the kind of the sign up list and everything, and you had all of these interested parties. Prior to this, obviously, it came born out of a need from yourself and everything. In your research, are you going to tell me that there was nobody out there doing this, or did you have a unique spin, or what was it?
So I initially did what many founders do and got very excited about the idea. And then I found a company that was doing something very similar, more fractional. So, invest from $50 or whatever in the US, called Vint.
Sure.
I've since got to know their CEO, very good business.
Right.
But the real kind of conviction, I guess, came from, one, the existence of wine funds, which are effectively doing what we do, but with much higher minimums. They can be as high as $250,000. And also incumbents in the classic car space or the art space. And, I was thinking, well, why shouldn't that be applied to arguably the most asset-like of collectibles? Asset-like because it has, a real-time market price, an objective market price. Wine, and I think that's where the initial conviction came from, seeing incumbents. So I didn't see it as a disadvantage. I kind of saw it as a motivator, really, because it was
that's great.
There's demand for this, and they've got the business working.
Well, they've proved the demand, which is nice.
Exactly.
You just got to find your angle and execute, which it appears you have. So let's talk about the tech. It sounds like you're in a rush to build the tech. Like, how scrappy was it? How much of an MVP was it? And talk us through that journey.
Yeah, sure. So I will caveat this by saying I'm not technical at all.
No, that's good.
And I really kicked back against the idea that you needed a technical co-founder to build a product like this, which is ultimately a platform-based product. I think those days are well behind us.
Yep, agreed.
So we actually worked with an agency to build an MVP of the platform, bringing our early customers in. And, I was very conscious of feature bloat. And I knew that if we built what we were envisioning, it wouldn't necessarily match up to...
How were you conscious of that? Because this was your first tech startup, and it's a common mistake that a lot of founders make, is the feature bloat. So how were you conscious of that? Did you read it somewhere, or were you just you just a smart dude?
No, I wish. No, so I actually think that came from my experience. I was commercial director at a tech startup prior to starting WineFi.
Right.
And their CEO, who is technical, Cambridge computer scientist, was very, very passionate about the idea that we should subtract rather than add.
Always.
And the development team ended up adding a ton of features that they ended up taking away. And it was kind of this lesson that was ingrained in me from that experience. And, prior to starting a company, I procrastinated in many ways for many years by reading books around entrepreneurship. So I read The Lean Startup, which talks about this kind of stuff. But I think it was only seeing it firsthand at the startup I was working at that made me try and transition that across to WineFi.
Right.
So the initial version of the platform, basically the core feature, unsurprisingly, was people wanted to be able to see a real-time pricing feed of what their wines were worth at any one time. And so it was a pretty simple platform. Yeah. And actually, we got away with just that for, nearly a year. We've only just now got the platform in a state where clients can self-serve on investment opportunities and then track the value of the syndicates that they're invested in on the platform. So
amazing.
It's been amazing, actually, how much we've been able to get away with. And I think that's, I bias towards the commercial side because that's my background and selling, really.
Yeah.
And I've kind of reflected on the fact that it's almost that product naivety that has helped us grow so fast. Because I think if I was technical and a more product driven founder, in my view, the product's ultimately the portfolios that we're curating, the wines that we're putting in those portfolios, and then of course the performance that we then achieve.
Yes.
Rather than the platform itself. And because I slightly shied away from development, I think we dodged a bullet there, because we could have spent months trying to make the platform just so.
Yeah, perfection kills startups.
Yeah, exactly that. And I see a lot of founders basically seeing their pre-seed round as that. And actually, you can get commercial traction much faster, not in every industry or not in every space. If you're building enterprise tech or deep tech or whatever, or health tech, But I think in our case, because we knew that people basically cared about the investment returns, it was something that, we basically just had to focus on client acquisition and almost build the platform, not as an afterthought, because I do think it's an important part of the proposition, but, almost alongside that acquisition, which is quite a unique place to end up in.
Very much so. Yeah, cool. Well, it's nice to see a success story born out of an agency relationship as being an agency guy myself with Loginet.
Woo!
We're obviously, let's go. We do some things and we build platforms and all that sort of stuff. And, a lot of the narrative is you've got to bring it in-house as early as possible and all this sort of stuff. And personally, I think all the time that's actually just as high risk as hiring an agency. If you do your research with an agency and you go with people who know what they're doing, you're going to have to pay a little bit more, but you will get a good product. If you hire in-house and you go and maybe hire like a sort of ex-Meta or something like that because it looks nice and, they might hate it, number one. Two, they might have been like sort of what I would call comfort zoning it, a larger company where they haven't really been doing that much, but they've been in a larger organization so they can hide themselves away. And then they get thrown into a startup and it's like, holy shit, I'm going to have to do some work now. It's just as risky. It's nice to hear those stories where, I don't want to talk too much about tech. I'm not here to sell. But it's great to hear that, and it's great to hear the kind of the non-technical founders can make it. You focus on the product, you focus on talking to your customers, which is what you've done so well. One thing I want to ask you about though, actually, is it sounds like if you went with the agency route, you obviously have to pay them unless they're doing like some kind of extra split. Did you pay them?
We did pay them. Yes.
Yeah. So you raised a little bit of cash prior to building the platform. Is that correct?
Yes.
Or was this like a friends and family round or whatever?
No, so we actually raised the 500k. We closed the round in October 2023.
Yeah,
Coterie,
and that was prior to building anything.
It was basically on a pitch deck, and so
that's amazing.
Investors, yeah, it was good.
So let's talk about that because that's a kind of a rare story these days, and it's great to hear. But any nuggets that you can give though? How did you pull that off, or anything that you can advise on that one?
So I don't know. I can kind of tell you the whole story. It was both a success and a car crash at various different points.
Right.
So I will caveat this by saying I was raising at the worst time in the last 10 years.
Really? Yeah.
Yeah. So, just after the bubble burst in VC, right? So, and not only that, but I was also raising during the summer.
Oh, right. When everyone's on holiday.
Exactly, where all the angels...
but drinking wine and kind of going, yeah, why not?
Why not? Maybe I'll pick this up in 6 months' time. And they've all jetted off to Mystique or whatever. So, and on top of that, I had no real angel network. So I basically started by reaching out with a really bad pitch deck in hindsight to the one person I knew that worked kind of adjacent to the VC space. And that was a girl called Anya that I used to work with. A lady called Anya, and she passed it on to a few people, and then I think our first ticket was 5k, like our first angel investment, but it was from someone I didn't know. It was a complete stranger based on my conversation, and I just thought, well, if I've got, because I'm from a sales background, and I was like, well, if I've got one, then I can get
that's momentum.
And then, the weird thing about it is, obviously in the UK, we've got the SEIS regime, so that first 250k, there are significant tax breaks for investors that come in for that first 250k. But weirdly, that first 250 was the hardest part of our 500k or so round that we did to raise, because I hadn't realized how much of a thing FOMO actually is.
Yeah.
And it was only when all of the SEIS had gone that loads of investors that had been sitting on the fence then came in.
Wow.
And I also think, so we got an SEIS fund on board, SFC Capital, who have actually been a really big value add for us and big advocates for the business as well. And because they are a fund and they do due diligence, I think that gave angels, and this is pre-seed, so it's an angel heavy round.
Sure.
Kind of the impetus they needed to come in.
Yeah, it gives them a bit of comfort, I suppose.
Exactly. So it was interesting how much of it is psychological. Because when you're investing in, a pre-product, pre-seed startup, you don't have anything really to go on beyond, is the founder credible? Do you like the founder?
Yeah, but you see, I'm just going to interject on you there because you said you got your first 5,000 and you're a salesman.
Yeah,
and
true.
That I'm picking up on that because founders need to be salesmen. And I think it really helps that you're a smiley chap and you're clearly bright and you've got a good idea and you're a salesman, and I think that that's probably a bit of it, right?
I think so. Not to blow my own trumpet at all, but I think that if you've worked in sales for, I was working in sales for 7 years or whatever, you do realize how important storytelling is. And it's that on steroids when it comes to the business. You need to be able to paint the vision that might exist in your mind, but that is completely new to these investors. Sure. And I also think, as a counterpoint, I think that this is going to be a huge generalization and will probably attract a load of hate from the early stage angel community. But I do think there's a degree to which early stage angels, so those that are investing and taking the biggest risk for hopefully the biggest reward at that early phase, are doing it because they want to be involved in a company at its earliest stages because it's fun. It's fun, it's something that they can talk about at a dinner party in the way they can't talk about the S&P 500 index fund. And I think that plus wine is also quite a cool story to be able to tell. So
another generalization, but wealthy people tend to like nice wine, right?
Yeah, I think from our experience, that's actually not much of a generalization. I think you're spot on there.
Okay.
So, I think that helped. But that could also be a negative, because if they're too into wine, they can't see why anyone would want that particular product. So it was a thin line to tread.
Yeah, right. No, that's interesting. But there's a kind of a founder market fit there, and
I think so.
The sales side of things. And I think having that kind of sales experience is pretty critical. If you're not, you mentioned you're non-techie, but you're a sales guy and you're a builder and you're a front man and you can lead the company and all that sort of stuff. These are the skills. So let's talk about where you've gone so far, and let's talk about where you're going. What are the plans, and what are the plans to scale? And if we hit any sort of growing pains or anything like that so far?
Yeah, all the time. I read something recently that was talking about how growing a startup is basically just moving from bottleneck to bottleneck. Right. In hindsight, I'm slightly concerned that was Elon Musk, who's not everyone's favorite at the moment.
No, it's not.
Yeah, but I think that's really true. Initially you have the big challenge, and I was so aware of how much of a challenge is, which is of course product market fit. 80% of businesses, it's a Y Combinator statistic, 80% of businesses fail because they build something that nobody needs or wants. And that was constantly at the back of my mind as we were growing the business, because you need to hit a certain level of critical mass in order to be convinced, and importantly, able to convince other investors in the business, of VCs, etc., that people do want what you're selling. And that's a huge unknown, because as much as books like The Lean Startup, etc., kind of try and coach you through what that looks like, it's actually quite an undefined, nebulous process. And that's where a lot of businesses ultimately die. So I'm very grateful that we've got past that, because that's kind of the fundamental bottleneck to overcome. Our current bottleneck, and this will probably remain the bottleneck for the rest of the business, is top of funnel. So we grew really quickly in year one. Clearly, you saturate certain channels, and then it becomes subject to the law of diminishing returns, where you have to seek out new channels. I'm not at all saying that we've saturated LinkedIn, but what constitutes a really healthy growth rate, percentage-wise, month on month, obviously becomes smaller, and you have to keep going bigger as a result in order to retain. We've been aiming to remain in full hypergrowth the entire time, and we've pretty much done that bar December, which is a slow month because no one wants to invest. Yeah,
you can let yourselves off on that one.
Yeah, well, yeah, maybe. Tell that to our board. So at the moment, when it comes to scaling, the business is increasingly set up in order to facilitate that scale. And the platform is largely self-serve, so you can put, clients can view opportunities and invest without having to have a phone call with anyone. And it's going to be a much slicker investment experience. Operationally, we're really set up to handle volume. So, we have a bonded warehouse where all the wines are stored. We're able to source the wines at attractive valuations for syndicates, which is a big part of the business, as you can imagine. And also, we're now starting to show performance, because we've been in operation now for 18 or so months. So far, it looks like we're able to generate, depending on the focus of the syndicate, between 8 and 18% alpha versus the wine benchmarks, which is great, because it means that, if you want to invest in wine and have the highest likelihood of outperforming the market, WineFi is therefore a contender. So really now it's all about top of funnel. And this is a transition for me, to be completely transparent. I'm used to B2B sales. So, one of the channels that we utilized in that kind of initial scaling phase was to partner with companies that had an established audience of investors. And that was very successful. So we worked with the likes of Alts.co, Hatch, Founders Capital, IG Wines on the wine side, and a number of other businesses as well. And that's great, but it is also quite resource intensive. So what we're looking now to do is really leaning into kind of paid social ads, paid search, affiliates. We expect to be a big channel for us. Ultimately, if you type in alternative asset investment or whatever, we want to be featured alongside other alternative asset businesses as the contender for wine.
Yeah, right.
And I think that's really important. And then what I expect to happen, so we're actually going quite broad now, having only focused on organic content creation and a few distribution partnerships, that hopefully at the end of Q1, we're recording this at the end of January in 2025, we will have identified the 3 or so channels that are yielding the best results. And then hopefully it will be like an 80-20 rule situation whereby we can just pour more capital into those channels in order to keep growing the business.
Right.
But it's very important that we don't just focus on top of funnel. If we build a great top of funnel and the support system isn't in place to basically ensure that existing customers are looked after, then we have failed, because we're in a high trust space. It's unregulated.
So then you might start getting into sort of AI automation phases and all that sort of stuff and all that good stuff.
Yeah, well, I'm actually thinking people.
Okay.
I think that having the ability to pick up the phone and call someone is really important. At the moment, that doesn't really happen very much. Most of our customers are satisfied with the kind of communication cadence that they receive from us, or at least appear to be. But we want to have someone on hand that isn't me, ideally.
No, absolutely.
To be able to kind of handle those inquiries.
Yeah. So and these warehouses, where are these warehouses? Are they in the UK or?
Yeah, so strangely, the UK has the most sophisticated, what's called a bonded warehouse system in the world.
Yeah. Wow.
Which is surprising, because the UK historically hasn't been, a huge wine producing region, I think it's fair to say. That's starting to change. Starting to change now with various different producers in Sussex. But effectively, what a bonded warehouse means is, on the surface, it just means VAT and duty are considered exempt. It's basically the wine is regarded as having never passed customs. And on top of that, so we store with Coterie Vaults, which is specifically built for the storage of wine. They're a fully owned subsidiary of our strategic investors, Coterie Holdings. And it means that temperature, light, humidity, vibration, anything that can impact the resale value of the wine is really carefully controlled. And then on top of that, it means that we're not saying, we've got the wine stored somewhere. There's a objective third party where, if our syndicate members wanted to, they could verify that the wine was being held under the name of the syndicate in that bonded warehouse. So it's separate from WineFi as a business, which is, cool. And I think it's an important trust builder, actually.
Yeah, absolutely. So we're getting close to the end of the time. It's been brilliant talking to you, Callum. I just want to recap with maybe some kind of insights or maybe some learnings or any tips that you can share for I want to talk about your early stage founder then. Let's go early stage this time rather than the scale up stage, because I think, you've really nailed that early stage bit. So any little nuggets that you can share for an early stage founder.
Yeah, sure. So I think I had one tactic which has kind of stayed with me, which I'm actually quite rejection sensitive. I'm less so now, but I found out during that fundraising process that I am. And I think it's because
a salesman.
When a business
I thought you'd be used to.
I know. Well, this is the thing. This is the thing. I was like, I should be used to this by now.
Yeah.
But I think it's when it's your baby in some ways.
It's personal.
And especially when you're articulating it badly. Yeah, exactly that. And I think that when you're articulating it badly, you haven't got used to telling the story, so you haven't yet worked out what resonates and what doesn't. It's very easy to to kind of take rejection personally. And I did.
Sure.
And I kind of still do, but less so. And I
getting better at
this
it.
Rule, which was, slightly. And the rule was, anytime we received a rejection email from an angel or a VC, I had to basically contact 10 more.
Okay.
So ideally through a network, but sometimes cold. And weirdly, that shifted my focus from kind of like passive rejection to active, proactivity. I tried to turn it into a good thing. And
that's amazing.
That really kept me going, because until you've finished raising, especially if it's your first time raising money, you don't know you can do it. And I found that really powerful. I don't know if that's any use to anyone listening.
No, it's perfect, because I always say stuff like every no gets you closer to a yes. And it's that same mentality, isn't it? Of kind of I love that one no equals 10 more outreach.
Yeah, and it stops you from slipping into a really unhelpful victim mentality. Ultimately, it's your responsibility to get it done, but it's very easy to go, oh God, why can he or she see how brilliant this concept is or whatever?
Right? They must be an idiot.
Yeah, exactly. Yeah, and of course you feel that way as a founder, but it shifts you out of that kind of pattern, and it's like, okay, right, next. And
That's
I think
amazing.
that's something that it was a skill I had to develop.
Yeah,
that mindset change, and it's something that I'm really pleased I did do, because I don't think we could have raised the round we did had I kind of just not lent into that and that sort of volume as well. Because it's 10 reach outs. You increase your chances of someone at least taking a meeting.
Yeah. That's such a good. That's a really good takeaway, Callum. I really appreciate you taking the time to talk to us. It's been fascinating, guys. Callum from WineFi. If you want to get in touch, it is winefi.co. If you want to invest, I should say. Yeah. Everybody, thank you for tuning in, and we'll see you next week. Thanks, everybody.
Thanks for tuning in to Launchbase. If you enjoyed this episode, don't forget to subscribe and share. Stay tuned for more insights on tech, funding, and product launches. See you next time.